Hey everyone, welcome back to my channel. Hope you guys have had a great time off over the Christmas period here with spending time with friends, family, everything like that. If you're new to this channel, go down below, hit that subscribe button, make sure you're not missing out on any more great content because today we're going to be talking about the top 3 investment strategies going into 2019 for the lower mainland of Greater Vancouver. And if you watch all the way to the end, I'm also going to give you a bonus on what I think is the #1 investment city you should be looking into in 2019. All right, so let's get started. It's no surprise. We've had a shift in the market. You know, when you watched this channel a year ago, we were talking a lot about the sexy strategies like buying something, renovating it, and selling it for a profit. Well, while there's still opportunity in that, there's a little bit more risk involved if you don't sell that property. So I talked about it before, having a plan B on this channel. You can check it out right over here. Now, let's talk a little bit about what I think are the top 3 investment strategies moving into 2019 that are going to be a little bit more stable, secure, and make sure that you are still building long-term financial wealth for yourselves. Again, these strategies we're going to be talking about are not sexy at all, in my opinion. So if you want sexy, high-risk strategies, I suggest you turn this video off. If you want to make sure you're preparing yourself for 2019 properly, then keep watching. So strategy #1 is to just buy rental properties. Buy something that you can put a tenant in and rent for a long term and just hold on to it. I know they don't make TV shows about this. They don't make anything because it's not really sexy. Again, you're buying a property, renting it out, and collecting monthly checks. But the reason why I think buy, rent, and hold, or just buying rental properties, is one of the #1 strategies you should be looking into in 2019 is because of 2 factors. One, we have still extremely low vacancy. So when we have low vacancy, we're going to have more increase on the rental demand, which means prices or rents are going to continue to go up. So if rents are going up, that means you're going to have a greater chance for better cash flow. In fact, there were several cities that I stopped investors investing in because all of a sudden it didn't make financial sense anymore. The rents to what you were buying it for, just they were too far apart. You were actually losing money. So now we're seeing those rents come up, that some of those cities are coming back into the fold for good rental investment properties. Now, some of the best, in my opinion, types of properties that you should be looking into would be suited houses. If you're looking into a suited house where you have an upstairs tenant and a downstairs tenant, that is where you're going to get your best bang for your buck or your most amount of cash flow, especially when you're looking into the Fraser Valley or getting closer to Vancouver. You have 2 suites contributing, but you're paying the price of something that's not a huge amount of money more than something without a suite, right? So you're actually maximizing the return that you're getting on those properties by having 2 tenants. Not only that, in these down markets, if you do have to carry a vacant unit for a month, you're not coming straight out of pocket all the mortgage, all the taxes, all your insurance, everything like that. You still have 1 tenant at least paying, so the drain is a lot less. So that's why I think suited houses, buy, rent, and hold is going to be your #1 strategy going into 2019. Now, of course, if you can't afford a suited house or you don't want to go too far out to buy those, you can invest in condos and townhouses. And I still highly recommend, if that's what you can get into them if you're investing for the long term. Again, you're not buying these properties and then turning them over in a month or 2. You're going to be sitting on them for the next 5 to 10 years potentially, just collecting that monthly cash flow and getting that equity being built as your tenant pays down your mortgage. If the market starts picking up again and you get appreciation, that's the cherry on top. I did a video way back on the 3-course meal that real estate is. Go and check that one out. I'll link it here as well. Now, investment strategy #2. #2 is to do what I like to call a flip to yourself. Now, you can still do fix and flips in this market and you can still be very successful, but you need to have plan B. Again, we talked about that plan B before in another video. Having that plan B is to keep the property as a rental if something happens, it doesn't sell in the time you've actually allotted. Now, too many investors get hung up on the fact that they need to sell, they're flipping the property, and they let that time frame go way past the point where now they're actually losing money. Buying a property that you can either flip to yourself or you can turn into a rental if it doesn't sell is one of the best things you can do. Reason why is because, 1, you're getting rental income, so we're going back to strategy #1. But number two, now you're getting 4 centers of return. You're going to get cash flow when you put a tenant in there. They're going to be paying your equity down. As the market improves, you're getting appreciation, but you're also forcing that appreciation up by doing the renovations. So let's say you buy, maybe it's a condo, you want to be closer to Vancouver. You buy a condo for $250,000, you put 30 into it. One, it's going to allow you to get better rent because tenants do like to pay more for nicer units, which may actually maximize the rentals that you'll be able to get. You'll also be able to force that value up, which gives you an opportunity that maybe you can refinance it in a couple of months, go on to a better mortgage, and actually take some of that equity that you've already put into it back out so you don't have as much capital in the project. So doing a flip to yourself, again, you're starting with the sexy strategy of buying it as a flip. You're going to do the renovations, make it look good, and one, if it doesn't sell in the time frame you've allotted, you put a tenant in there, and now it's a rental property. You may refinance, pull some equity out. Or two, you plan ahead knowing that your goal is to keep that property. You find a really, really good property you can do some awesome renovations to, maximize that rent, and get it locked down for yourself. That would be, in my opinion, the strategy number 2, flip to yourself. Strategy number 3. Okay, strategy number 3 is maybe it's time to start looking into a different asset class, moving from the residential side into more of a commercial side, and that's buying multifamily properties. Now again, the reason why I like multifamily is because there's a lot of different aspects of it. You've got the multiplier effect with every time you've increased the income of the property, you're also increasing the value of the property. And in a market like this where we have a downshift in the market, people are trying to sell, there's discounts happening, but at the same time we have a very extremely low vacancy where there's still room where you can increase the rents and increase the value of the building. That's where opportunity lies in a market like this. So you can also combine that in a way with both the first strategy, buy, rent, and hold. Just buy a property, hold on to it, and start increasing the rents as you can. Or you can do the flip to yourself. Buy a property, maybe you have to do some evictions on some of the tenants, maybe not, depends what happens. Renovate the units that are empty, increase the rents, and start getting that value up. So again, with the way the market's moving though, be careful with a strategy like this. If you do want to do a massive renovation on a building, you need to be prepared that the laws have changed and you need to follow the laws. We have some real experts within our team now that really know how to handle this and what types of things you need to do to make sure you've got the government on side, knowing that you're planning on doing these massive renovations. All right, those are my top 3 strategies: buy, rent, and hold, flip to yourself, and multifamily purchase investments going into 2019. They don't sound as sexy as they used to when it's flipping and making a nice home, but at the same time, they're stable, they're secure, and they're going to get you through this shifting market that we have while still increasing your long-term wealth. Now, if you watched all the way to this point, I'm going to be letting you know what I think is the city that you should be looking into the most right now. That city is Chilliwack. Now, Chilliwack is on the far side. For those of you guys who live in Vancouver and think the world ends at Boundary Road, I have a lot of investors that are starting to look into Chilliwack. The reason for that is a couple of reasons. One, the rents that you can get in Chilliwack now are starting to be on par, if not better in some ways, than areas like Maple Ridge and Abbotsford and Langley. But the prices are significantly lower. So if you're looking for cash flow, you're going to get a lot higher cash flow in Chilliwack than you will out in some of the closer to Vancouver properties. So keep that in mind. Also, you're not paying $1 million for a suited house. You can still find a really good suited house for about $650,000 as of recording this video in Chilliwack. If you go into some of the nicer areas like Sardis and Promontory, you're going to be paying a bit more of a premium, but you also get a bit of a premium rent as well and a better tenant. So keep that in mind. There's lots of opportunity. The reason why I also like Chilliwack is because they're doing a lot of investment into infrastructure. You're seeing a lot of developments. In fact, I was just on a car ride out to Chilliwack, bringing an agent from our office out to take a look at what's happening in Chilliwack. He was floored, and he's working with some developers in the area now as well. We also have the new Molson Brewery. Molson has decided to shut down the brewery in Vancouver, and they're moving it out to Chilliwack. When a big company like that starts investing money in a city like Chilliwack, you know things are up and coming. There's also new Starbucks opening. There's new shopping open left, right, and center. So I think Chilliwack is really going to be on the map for investing. So if you've been thinking about buying a suited house, give me a shout. We'll go out to Chilliwack and I'm going to open your eyes at what the opportunity is out there. Ladies and gentlemen, that is it for me today. I hope you guys enjoyed this video. If you guys did, throw some comments below. What actions are you going to be taking for your investing career going into 2019? Hit that like button and don't forget, hit that subscribe button. I thank everyone who's been subscribing and helping me grow this channel. I'm looking forward to 2019. I'm looking forward to helping you grow your wealth in 2019. I'll see you next year.